Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of May 6th through May 10th, where we'll try to help you make money trading in May 2024, make money trading in the spring, make money trading all year long in any market conditions. And we'll talk about the old adage, sell in May and go away, and why we don't think you can sell in May, but we don't think you should go away. So again, we'll talk about various strategies, trade ideas about how to make money trading in May of 2024 and in any market conditions. So here's our Google document with our notes for part one of our weekly trading game plan for May 6th through May 10th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes documents contain links to bonus videos, the tools and resources we use to do our market analysis, come up with our trading strategies, trade ideas, etc. We keep all of our notes documents for our weekly trading game plans in publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as previous weeks, and you can find a direct link also to that Google Drive folder in the description box below. So let's get started, and we'll look at how the markets ended up on Friday in the main page of FinViz. Welcome, Gerald Fitz, Easy Mike. Glad to see you in the chat today. Hope you all had a great week and are doing well. So we can see all the markets had a pretty exuberant rally based on the weaker than expected jobs data that came out on Friday. We'll look at that jobs data. We'll talk about also the Apple earnings. Actually, it wasn't even their earnings. It was more their record stock buyback, slight bump up in the dividend. So we see all the markets were up. NASDAQ benefited the most, about 2%, Dow 1.2%, NASDAQ 1.26%. See, we had 73% advancers, only 23% decliners, 80% new highs, only 20% new lows. But we've only got 46% above their 50-day moving average, 53% below. So under the covers, there's a little weakness there, and 64% above their 200-day, 35% below. So even though we had this exuberant rally, you can see there's a little bit of a bearish signal overall. As you can see, the Magnificent Seven were the primary beneficiaries of this weaker than expected unemployment data. Again, we'll talk about the impact of that. Again, Apple had a 5% run plus based on their record buyback. Microsoft benefited. NVIDIA had a bounce back. The only real weakness was Lilly, and I think that was on some other obesity drug announcements. So a little bit of weakness in healthcare, a little bit of weakness in some financials. But again, as we'll see, pretty much all the sectors were positive. Current news, Berkshire Hathaway just announced their earnings. They had a very positive earnings, so we'll probably see a bump in the XLF, the financial sector, based on Berkshire's earnings. They're, I think, the largest percentage in the XLF. Saw oil break down below 80. It's actually broken down all the way below 78. So seems like the tension in the Gulf has kind of abated, and there's some seasonality going on with oil, so it's been declining pretty rapidly. Similarly, natural gas popped up over 2. Again, I think that's mostly a seasonal factor. Gold's been oscillating pretty violently around this 2,300 level, so it did dip below 2,300, bounce back up. We'll look at that in the futures as well. And all the indice futures are pointing very positive right now. Also, we saw bond yields. They were up in the 4.8% range, and they declined on that weaker than expected jobs data back below 4.7. See, we don't have quite as much of an inversion, 10-year down to 4.5. So your interest rate sensitive sectors, real estate, etc., benefited from that reduction in bond yields. Welcome to Ricky Khan. Glad to see you all. Hope you all are doing well. So next we'll look at the major indices. ER screeners and the technology components. Again, just a reminder, you can access these screeners via the links in the notes, also in the screeners tab of our ETFs and our watch list Google Sheets during the trading days. So we see really, although all the indices had that, 1%, they had that 1% plus jump. So the Dow jumped up. You can see its longer or shorter term moving average. So it found resistance there. IWM actually broke above its moving average. So I wouldn't be surprised to see some retracement, some gap fill at some point, although we'll see if the exuberance continues into Monday. Qs similarly bounced up right to that moving average, found resistance there. Again, gap to fill coming down. SPY less so, although it did jump up above that moving average, and it looks like it came back down. You can also see that narrowing wedge on the SPY, multiple top on the Qs, narrowing wedge on the Dow. Pretty flat on IWM. Got the components within technology. Welcome, Danelle D. Thank you for joining us. Glad to see you again. Hope you're doing well. So again, all the tech components pretty much had a gap up on that weaker jobs data, on the positive reaction to Apple earnings. ARC still, closer, just above its moving average. Again, I would expect, back down to that support, bounce along that support. Fang U's, again, Apple, big component, so it bounced up to its moving average. Looks like it found resistance there. SOXL, not so much, so semiconductors, not as big of a reaction, did gap up out of the channel, but again, we see this narrowing channel on semiconductors, so it's slowly oscillating down to a point. LabU, even though it's biotech, not really related to Apple, etc., did get a gap up on the general technology. Again, that reclaimed its longer term moving average, got resistance on the shorter term. Again, I would expect some correction in biotech as well. TQs, again, that gap up, didn't quite make it up to its moving average. It's been, bouncing off this lower trend line, got the multiple tops. Similarly with the broad technology, got that gap up. Again, got some room. So we'll see if the technology sector broadens out or if we get that correction, early next week. So I hope that all helps. Let me grab a quick drink and we'll look at the group sectors, industries, and FinBiz. Okay, so again, Friday, we see pretty much all the sectors were in the green. The biggest beneficiaries, technology. I thought utilities was a little surprising, but again, that reduction in bond yields probably attributes for that bounce in utilities. Again, I think we'll get a correction in the bond yields back towards the upside, and then that would cause a rotation back out of utilities. Again, materials, we'll see the dollars weakened, DXY's weakened. That benefits some of the basic materials. Again, real estate benefits from that reduction in yields, energy, one of the weakest, and then also healthcare. Again, we saw oil break down now below 78. Again, for the week, utilities benefited the most. Again, we'll talk about the probability of rate cuts. Real estate, again, benefited from reduction in that bond yield. Technology, again, the worst sector was energy. Again, reduction mostly in oil. For the month so far, again, utilities, communication services, probably Amazon, some possibly Google. Again, the weakest real estate and energy. Again, bond yields been oscillating, so that we'll see that rotation in and out of the interest rate sector, sensitive sectors as those bond yields oscillate. Energy had been strong, utilities have been strong, again, real estate's been weak. Look at the industries. So again, solar, that guess of near-term rate cuts, and they bounce solar up. I think that's overly exuberant. Got utilities, again, semiconductors, technology benefited. Some basic materials, coal, steel a little bit, some of the REITs, so real estate. The only real negative, again, medical, healthcare, silver. Again, we'll see silver, I think it's below 27 now. Again, a little weakness and a lot of volatility in gold. For the week, utilities, see a lot of utilities, some REITs, real estate. Overall weakness, silver, gold, some oil, some coal. Again, utilities, real estate. So we see this recurring theme for the month. Some REITs weak for the month, trucking, transportation, steel, silver. Okay, I'll open up the economic calendar at investing.com, talk about some of the highlights for the week, my notes. Just a quick reminder, as this economic data comes out as quickly as possible, I try to capture the important economic data, post it in the Surf the Markets channel in our Discord. Our Discord's free to join. You can find a free invite to our Discord in the description box below. Again, we'd love to have you participate in our Discord. Great place to get, again, the real-time economic data. I try to capture a screenshot from investing.com, the raw data, also additional news as it comes out. So again, another great source for real-time economic data, and also a great place you can participate and discuss trading ideas with your fellow BeachBum traders 24/7. So we'd love to have you join our Discord. So not much Monday, Tuesday. Wednesday, we got mortgage rates bumped up a little bit. And that's prior to the decrease in bond yields we got later in the week. Mortgage applications down. Again, high mortgage rates. So Wednesday, we got ADP non-farm employment was up a little bit more than expected. Again, different approaches on how they count this data. Also, this is April data. Manufacturing PMI, a little weak, a little better than expected. The JOLTS, this was interesting because it came out right before the Fed decision. So these are open jobs, and it was less than expected. So we're seeing a little bit of contraction in the open jobs, the gap between supply and demand in the jobs market. And again, we saw that in the subsequent data as well. Then we got the Fed interest rate decision. So I've captured some of the highlights of both the Fed statement and the press conference. We saw some pretty violent activity in the markets during the press conference. I think it was up 1% and then ended up giving back all those gains and ended up flat to negative. So they left the interest rate flat at 5.5%. Again, no surprise. That's pretty much what we expected. They noted further progress, lack of further progress towards inflation. So we got, first quarter inflation was hotter than expected. So they're not getting down to their 2% target. They're still strongly committed to returning to their 2% target. And you heard Fed Chair Jay Powell state numerous times they will get down to 2%. So they're sticking to that 2%. So then we got the press conference, and here's some comments from Powell. Inflation eased substantially over the past year, but still too high, too high. Further progress not assured. Data received this year has been higher than expected. Gaining confidence to cut will take longer than thought. So again, we don't expect them to make any cuts, any decision to cut anytime soon. Again, in my humble opinion, just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and entertainment purposes only. But again, I think that this decision and this higher than expected inflation data is going to delay their decision to cut for at least another quarter and possibly longer, because they can, want to see a whole quarter's worth of data. And you heard Powell even state that they don't like to go on a month-to-month basis. They like to see a whole quarter. So that would put us, into the September to November timeframe before they would even have enough data to even consider a cut. That's my opinion. He says, I don't know how long it'll take before we can cut. So again, they don't know. They keep reiterating they're going to be data dependent. There's not any rush to cut. There's no reason to cut. And also he addressed the topic of stagflation. And even though inflation is a little higher than expected, GDP is still positive, no fear of a recession. So as he commented, he doesn't see the stag or the inflation. Although you'll still hear commentators discussing the topic of stagflation. And on Thursday, we got challenger job cuts. Cuts were less than previous, negative, so fewer cuts. Continuing claims lower than expected. So again, this jobs data says the job market is still healthy. Initial claims less than expected, so less people losing jobs. So again, job market continues to be relatively resilient. Productivity was not very good. Unit labor cost was higher than expected. So again, those are negative from a standpoint of inflation. Then Friday, we got the non-farm payroll data, and the big number people focused on was, the overall non-farm payroll for April was much less than expected, so fewer new jobs than expected. And the market took that as a sign that the job market was weakening, and therefore the Fed would have to cut. And so we got that exuberant run on Friday. Again, I think that was probably, in my humble opinion, probably an overreaction. I don't think that the Fed's going to cut anytime soon, and I think we'll get a normalization as that kind of sinks in. The unemployment rate ticked up only 0.1% after being flat. So again, not a dramatic weakening in the employment. Participation rates flat. Average hourly hours went down a little bit. Hours earning went down a little bit. And year on year, earnings went down a little bit. So, but again, significantly in above, 2%, 3%. So still the potential for some wage inflation. So again, my humble opinion, although the market reacted very exuberantly to this data, got the big run, particularly in the Mag 7s, I think we may be in line for a correction from that overly exuberant run on Friday. So let me grab a quick drink and we'll go and look at the rest of the economic calendar from last week and what we've got coming up for next week. Okay, so the rest of the calendar from this week, got some bond auctions, pretty flat. Employment benefits a little up. Wages up. Housing prices up, so that's inflationary. OPEC crude oil production up a little bit from expectations. And we talked about mortgage rates are up a little bit. Talked about non-farm payrolls and ISM, JOLTS. Crude oil inventories up significantly more than expected. So again, that may be part of the reason for the drop in oil prices down below 78 now. So again, we just saw a little bit of increase in OPEC production. Talked about the Fed interest rate decision and calendar job cuts and jobless claims. Car truck sales were still pretty resilient. Factory orders as expected. Natural gas was up, but less than expected. So again, we saw an increase in the natural gas price. Talked about payroll data. I saw manufacturing, a little employment was a little weak there. Baker Hughes, so oil rig count dropped. So again, as we saw oil price drop, the rig count has dropped. So they're trying to, hold the oil price around that 80 mark. So now again, we've got the start of all the Fed speakers coming out. So let's look at this week real quickly. Again, Fed speakers talking. Again, in my humble opinion, I think we're going to just get a lot of chop, a lot of volatility as all these various Fed speakers come out and talk, as we get these additional economic data points. I think the probability of a Fed rate cut like September, November, December, I think they're just going to oscillate that probability and time frame back and forth based on the economic data and what these various Fed officials say. So again, my humble opinion, I think what we've got coming is a lot of chop, probably a scalper's market, short-term trading, day trading type of market with a lot of chop based on, again, this economic data, the various Fed officials as to the probability when they're going to cut, how much they're going to cut this year. Again, my humble opinion, just a lot of chop. We get mortgage data, crude oil inventories, etc. More Fed speakers, get jobless claims data. We'll see if that shows any change from what we saw last week. I don't expect a dramatic change, possibly again slight weakening in the job market, but again, I don't think that will cause a big difference in the Fed's decision. We do get Michigan sentiment, and that has their inflation expectations have been pegged in the 3% rate, and that's not where the Fed would like to see it. So I'm sure they would like to see that come down. So if it doesn't come down, that would be, again, another reason to stay higher for longer, delay any cuts, get rig counts, etc. We're also in the heart of earnings calendar, or the earnings season. You can see the full earnings calendar here at investing.com. There's Berkshire. So we've got most of the Mag 7 out of the way with the exception of NVIDIA. NVIDIA will be an important one. It'll obviously impact the AI-related stocks. They have a tendency, to beat and raise guidance. If they do not, you could see a pretty negative reaction. I see some other semiconductors, some banks, etc. I'll let you on semiconductors. So some other semiconductors, MicroStrategy, some other tech. We also see a lot of volatility based on these earnings, not only if they beat top and bottom line, but what is their guidance? Also, we're hearing concerns over CapEx with like Meta, and there was some concern even with Apple, but their reaction was driven mostly by that record buyback and raising their dividends slightly and talking more about AI. So again, they got the pop off of that. Again, I would highly recommend you go through the whole earnings calendar looking for anything that's going to impact your trading decisions, impact your portfolio, etc. So again, I think we'll see a lot of focus on earnings, focus on guidance, also increased focus on CapEx. How much are they going to spend going forward? Also a focus on that infrastructure for AI. You'll hear a lot of talk about AI. So again, I think earnings are very important. They're going to cause another source of volatility and also opportunity. So again, you can hear our strategy for how to trade around earnings via the link to that video in the notes. Also, Webull will come out probably tomorrow with a highlighted graphical version of the earnings calendar, so you can refer to that via the link in the notes. Reminder, we don't get the next Fed interest rate decision until middle of June. Again, my humble opinion, I don't expect anything to happen there, anything to change, but we do get another SEP, another dot plot in June, so we'll have a better idea of what they see. Do they still see 3 rate cuts? I doubt it. I think we'll be down to 2 or even down to 1. And we'll know that in June. But again, I don't expect them to make any decision. They're going to tell you they need more data, they need more confidence before they can decide to cut. Welcome, Walter Lyons. Thank you for joining us. The Crow, I think I saw as well. Gerald Fitz, hopefully I welcomed you as well. Let me grab a quick drink and we'll go and look at the market screen in Webull. Welcome, Wisdom. Thank you for joining us. Glad to see you here as well today. So just a quick reminder, if you're not already using Webull, you can still get 75 free fractional shares of stock by opening and funding an account with 25K. If you fund it with less than 25K, you get 20 free fractional shares of stock, each worth $3,000 to $3,000. Also, as we'll see, Webull recently started futures trading. Also, I got a notice, and I will post it in our Discord as soon as I'm able, that they're now allowing some naked option strategies. So, again, I will post that as well in our Discord from the email that I got. So, now you can trade stocks, options, futures, etc., all in Webull. As you see, we use Webull for our market analysis, our due diligence, the majority of our trading. So if you're not already using Webull, I'd highly recommend it. And if you'd please use our referral link, you can get your free fractional shares of stock and also help support our BeachBum trading community, which we greatly appreciate. I'm using the online browser version of Webull. This is the market screen. And we see Friday, more advancers than decliners, but really the percentage of advancement was very small, so very few contributing to the majority of the index increase, mostly the Mag 7. Again, with the bump in technology, we see a pretty flat, some inflow, slight outflow towards the end of the day in the NASDAQ, although relatively stable. Typically, we see outflow in the NASDAQ on Friday, and then we always see this more, when not always, but most of the time see this big bump of inflow into the NYSE on Fridays. Again, you can see the near-term earnings calendar here in the calendar section in Webull, so you can see what's upcoming in the very near term, see the expectations, etc. So keep abreast of who's reporting earnings soon. Let's look at the best performing industries for the week. So it looks like hardware, cost is a sound GoPro. Interesting. Biotech had some positive. Some of these are very small. Utilities, some education, some solar. So again, that pop in solar due to the drop in yields, some retail, electronics, utilities, some REITs, again, drop in yields, mortgage rates, some aerospace. Home builders, again, drop in mortgage rates, a little pop in real estate, home building. Got the most popular ETFs. So again, up on the Qs, up on the SPY, up on the Dow. So all the indices pointing up. The cyber, that's interesting. So up on the NASDAQ, up on the S&P, up on the Russell, small cap. So pretty much everything up. And down on the VIX. So we saw a pretty dramatic decline in the VIX as well on that jobs data. The Fed cut, or the Fed decision. No surprises. So we saw a decline in the VIX on the Fed decision, and then a real dramatic drop in the VIX on the jobs data on Friday. Industrials. So industrials performed well as well. Healthcare, financials, pretty much all green. Defensives a little less. Commodities, we saw a big pop in wheat. So agricultural products, DBA, natural gas, again, natural gas, wheat. $25 plus, government plus, so long end of the bond curve, and we'll look at the foreign currencies and the futures as well. Again, we saw a weakening in the dollar, saw a strengthening in the yen. So let's look at the futures. As I mentioned, you can see the offer of Webull had the past month for futures trading via the link in our Discord there. Let me grab a real quick drink and we'll look at the futures. So again, you see this exuberant gap up in all of the indices, even the Russell, although not quite so much. So again, we've got some little bit of a gap to fill in all of them. So again, I wouldn't be surprised, to see some level of correction, and then we'll see if we get a push upward or if it rolls over back down. You see the trend is now, pretty down on all of the indices. Made lower highs, lower lows. S&P a little bit flatter, more stable. Nikkei didn't quite bounce up as much, neither did the Euro stocks or the DAX. So the foreign markets didn't bounce up as much, which makes sense. Their jobs market, their inflation output is very different from the U.S. Can we see that dramatic drop in the VIX? So drop down from 16. I think it's even below 14 at this point. So again, after the Fed decision, some unwind probably of some risk hedging, and then on the jobs data, we got a steep decline in the VIX, although the overall trend is slightly up. But every pop has been rejected pretty dramatically. Can we see that drop off in oil? Tested 85, rolled over, broke down below 80, now below 78. So a lot of momentum to the downside. We'll have to see if any increased tension in the Gulf causes a reversal in that direction. Again, natural gas now popped back up, broke through 2 up to 215, broke its previous high on the rollover of the options, so it's definitely trending upward. Gold, again, been pretty violently oscillating right around that 2300, so it got rejected from 2350. We'll have to see if that 2300 holds or if it's going to break down further. If it breaks down below 2300, again, quite a bit of potential downside. Similarly with silver, it's got resistance at 27. It's continuing to test that resistance. If we see a further breakdown, again, we got some downside in silver. Copper rolled over, it's consolidating. Platinum holding up, but palladium broke down. So see corn popped. We'll see a big pop in oats, wheat. So wheat popped back up. Looks like it rejected from the previous high, but definitely a lot of strength there. Lumber bounced. Sugar's down. Coffee's down. Again, then we saw that rebound bottom and swing back up in bond prices, reduction in bond yields. I do think, they're going to probably reverse and retest that 5% level when they figure out, the Fed's not going to cut anytime soon. So I think we'll see, further volatility in bond prices and bond yields. And we saw the DXY broke down below 106, descend pretty quickly, had a rejection off that bottom, bounced back up pretty quickly to almost 105 again. And I think a lot of that was this, the yen bottomed out, hit like a 30-year bottom, and then bounced back up. There's speculation that the Bank of Japan is intervening. I don't know if Easy Mike has any additional news out of the Bank of Japan, they haven't necessarily given credence to that intervention, but it does look like they intervened. We'll see how much they can prop the yen back up. So as we'll see, we're currently long YCL, which is long the yen. We've got a couple ETFs, YCS to short, YCL to long. The yen that you can use to trade the volatility in the yen. Swiss franc bounced up. Most of the foreign currencies bounced back up. So we'll look at our ETFs. So if anybody in the chat has a particular topic, category, ETF that you would like to look at, if you throw that up in the chat, we can take a look at those ETFs. Just a quick reminder, as we identify these trading opportunities, trade ideas, we jump over to our ETFs Google Sheet and find an ETF that we can use to trade that long or short trade idea. And you can get access also to our ETFs Google Sheet 24/7 by joining our Patreon at the All Access or VIP level. Again, great way that you can also short in our retirement account, etc. We have a whole series of videos on how you can use our ETFs Google Sheet and use a variety of ETFs to trade in our BeachBum trading channel. So we've talked about the various pairs. Again, in my humble opinion, I think this is going to be a very short-term trading market, very choppy. So you can use any of these pairs to trade long, short on a very short time frame. So biotech, LabU long, LabD short, ARK-K long, SARK short, etc. Got a couple on cannabis, rescheduling. Had a pop in cannabis, so MSOX, MSOS, MJ. You could pick whichever one you prefer. China, it looks like China might be slowly swinging back up, so yen China long, yang China short. So again, plenty of opportunities for short-term trading, making money using these pairs. FANG U, so the FANG stocks, again, we're pretty high. Got some room above its 52-week, but again, short-term trading, short FANG D, long FANG U. Gold, again, short GDXD. Again, we're currently long GDXD, which is the short on the gold miners. There's also dust and DCC to short, GDXU to long, or GLDI for monthly dividends. So again, plenty of opportunities to make money off that volatility in the gold. Similarly, in silver, we'll see AGQ is the long, ZSL is the short. We'll talk about that again tomorrow as well. Wood on lumber. So on the got SQQQ, short the Qs, TQQQ, long the Qs. Boil and cold, boil long, natural gas, cold short. We've got individual leveraged ETFs on several individual stocks like NVIDIA, Amazon, etc. If you don't find it in our main ETF sheet, you can do a find in our research sheet as well. So you can also see there's a short on Apple, APPD, long on Apple, leverage long on Apple, AAPX. So again, if you don't find an individual stock long or short ETF, also search in our research tab. Been looking at Mosaic. They had a decline based on their earnings. Might be one to watch. I'm keeping an eye on that. It's a little bit above its 52-week low. It's a way to play potash, also fertilizer, etc. So maybe we'll talk about that in more detail maybe tomorrow as well. And the SPX, S&P, semiconductors, SOXL and SOXS. We talked about silver, AGQ long, CSL short. You can trade solar with Razor Tan long. Again, the broad technology, we're currently long TECS, which is the short on broad technology. You can long with TECL. Here's Tesla, individual stocks. The variety of treasuries. So again, you can trade the volatility in treasuries, in TLT long or TMF long. Also several of the shorter term time frames, short. Essentially on TLT is TBT. So again, you can make money trading either direction on the treasuries as well. Uranium's been relatively strong. Strengthen the utilities. Again, VIX, quick decline in the VIX. So SVXY is the short on the VIX, UVXY the long. Again, big pop in wheat. And again, we talked about the yen. So we saw that pop up in the yen. We're currently long YCL. You can short the yen with YCS. So again, if you want to make money off short-term movements, that pair. And we'll see if the Bank of Japan continues to intervene, push the yen back up, or if it retraces back to that 30-year low. Okay, just checking the chat for any other tickers that I might have missed. Again, if anybody has another ETF or topic you want to look at ETFs, please throw that up in the chat. I'll leave this up for now. Grab a quick drink and we'll go over. We'll open up the charts for how the stock market tends to perform in May. We'll talk about strategies about how to make money trading in May. Okay, again, let's talk about various ways we can make money trading in May of 2024. See how the markets typically perform in May. Probably go back and look at how April turned out for this year, but we can see that May tends to be perform worse than April. It tends to be one of the bottoms. So particularly in the recent history, May has been negative. Again, this adage, sell in May and go away. So a lot of selling. So May tends to drop off after we have this nice typical upswing in March and April, and we get this drop off in May. And again, in recent history, the past 5 years, May has actually been negative. Then we get a pickup back into June, a little bit more positive, and then peaks in July and then drops back off in August. So again, May tends to be negative, again, driven, in my humble opinion, by a lot of the people. Everybody knows that adage, sell in May and go away. So a lot of people are going to cause a decline in the markets. Again, I think, a lot of people have been trying to front run that up until the end of this week. We saw a lot of selling, a lot of negativity in the market. In my humble opinion, I think that was probably a lot of people trying to front run this sell in May and go away adage and get out, ahead of the sell in May crowd. So we have several videos we've released in the past about that whole thing. Watch out for the sell in May and go away crowd. And you can find that short video also on our BeachBum Trading channel. We've also got a number of strategies on how to make money trading in May and how the markets typically perform in May, best performing sectors and industries in May. So again, you can listen to those as well as why we say, you can sell in May, but don't go away. I think there's plenty of opportunities. You can make money even in a down market. So again, we've released plenty of videos on ways that you can short the market, ways you can use ETFs to short the market, strategies. Even though technically this isn't necessarily a bear market, you can use those strategies for bear markets to make money when the market's going down. So again, I don't think you need to go away, but selling in May or shorting in May may be the most advantageous way to make money in May. So I also want to go and let's see how April ended up. So I want to go to investing.com. Just another quick reminder, you can find links to all the frequently used tools or resources we use. Also on our homepage. Our homepage is beachbumtrading.com, bum without the U. So you can find that link to investing.com. If we go to the major indices, we can go to the performance. And we can see for the past month, pretty much all the markets were negative. So even though the chart was showing that April is typically a positive month this year, we had a negative, slightly negative. So negative 0.6 on the Dow, 1.5 on the S&P, 0.5 on the NASDAQ, 1.5 on the IWM, the Russell. And again, in my humble opinion, I think we could attribute that to the people trying to get ahead of the sell in May and go away crowd. So again, this April was a little weaker than typical. We'll see if we get more selling coming up in May, more profit taking. In my humble opinion, I wouldn't be at all surprised to see more profit taking in those in the high flyers, the Mag 7s that are a little weaker, like Meta. Some other technology stocks that, the AI FOMO got over their skis, went up too much. I think we might see some profit taking in those types of stocks. So, be aware. I hope that helps. Also, you can hear our discussions about best performing markets, industries in the spring, how to make money trading in the spring. And again, in my humble opinion, I think we're going to have a choppy market driven by a lot of volatility on the economic data, various Fed speak, and also earnings and additional, guidance, capex, etc. So again, just reminder, not financial advice. These are my opinions on all of our contents for education and entertainment purposes, but we hope that all helps. I want to quickly try to answer a question that Alan Krantz asked in the live chat last week on 424. He asked, U.S. Treasury bond yields been going up a little at a time. Fed will either be forced to start buying Treasury or lower rates. No. The Fed, you see the bond yields pretty much oscillating right now. They went up to 4.8, now they're down in the 4.6s, etc. That's not going to cause the Fed to cut. All of their two mandates are price stability and full employment. So those are the two factors that would cause the Fed to raise or cut rates. If they don't have price stability, if we have high inflation, then they need to boost rates. If the job market declines, get higher unemployment, then they need to cut rates to again spur business growth, spur employment. We also heard that they are still winding down. They're performing quantitative tightening, so they're letting bonds roll off of their balance sheet, although they are reducing the rate at which they let bonds roll off their balance sheet. So they are still buying Treasury bonds, just they're letting more expire than they're buying, so that their balance sheet comes down. I think it going down like 60 trillion or something starting in June. So that's the rate at which they tighten, the rate at which they let their balance sheet roll off will slow, but they're continuing to tighten, continuing to let their balance sheet shrink. So it's another form of quantitative tightening, another form of monetary restrictive policy. The bond yields, again, is not going to cause them to cut, in my humble opinion. So if anyone else has other opinions, love to hear them. You can put them in the comments to this video, put them in our Discord. Again, our Discord's free to join. I'd love to have you join our Discord, participate in these discussions. We can talk about, again, anything related to trading, various trading assets, trading styles, etc. Again, free to join, and you can find a direct link in our in the notes or in the description box, also on our homepage, etc. Also, we'd love your feedback on how we can improve our weekly trading game plan videos or any of our videos, our tools, our Google Sheets, etc. We can provide you additional tools to help you make money trading, be it in May of 2024, the spring, anytime. What can we do to add more value for all of our fellow BeachBum traders? So again, if you have any other questions, comments, etc., if you're watching this after the fact, please put it in the comments to this video. Again, tag us in our Discord, our BeachBum Trading, all lowercase, no other characters or numbers, pounds, etc. Anyone else who's an imposter. You can also contact us via our social media sites, and you can find links to our social media sites all on our homepage, beachbumtrading.com, bum without the U. So again, we'd love your feedback and questions. Again, I might miss your question or comment in the live chat here on our live streams, and also, I can't keep up with live chats on other people's shows generally. So please, if you have a question, if you want us to look at a particular stock or a topic, etc., please put that in the comments to one of our videos or in our Discord, or contact us via social media. So again, if you have anything you want us to look at for tomorrow or future weekly trading game plans, please let us know. Otherwise, we hope you all come back. Same bat time, same bat channel, 10 a.m. on Sundays for part 2 of our weekly trading game plan, where we'll take all this market analysis, all these trade ideas, trade strategies, and we'll be selecting our top swing trading stocks to watch, stocks in our bullpen and our shopping list. We'll also talk about dividend payers and some option strategies as additional ways to make money trading in May of 2024, in addition to all of our swing trading trade ideas. So again, we hope to all see you all back for part 2 tomorrow, and we hope you have a great day. Thank you all for watching. Have a great day.